When I look back at my trading life, I see one thing more than anything else. It wasn't the market that tricked me most of the time. It was myself. The market's job is simple. It moves up, it moves down, it rests, and then it does it again. But the mind of the trader, now that's a restless animal. Fear and greed, they run the whole show. You can draw all the lines on your charts, study every price record, watch every tick yet. The instant your own fear takes the wheel, or your greed whispers in your ear, all that careful thinking gets tossed out like it never existed. Tell me, haven't you felt that before? A man sits in front of his tape, sees a stock rise, and he buys a little. It moves up some more, and what does he do? He doubles. The thing climbs further, he's grinning, counting profits he hasn't pocketed. That's greed talking. He forgets the market doesn't owe him a thing. He forgets that every point upward has less value if it isn't planned, and then when it reverses, the same stock that made him proud yesterday makes him afraid today. He holds, hoping it'll come back. He tells himself lies just to soothe his fear. Before long, the profit is gone, the capital is shrinking, and the mind is panicked. I know this story too well because I've lived it. Have you? The public thinks the market is a puzzle of prices, but the real puzzle is the trader's own emotions. Charts are nothing but footprints of mass fear and greed. Every swing on the tape is somebody's imagination taking hold, somebody's pride, somebody's terror. I made and lost fortunes by learning this the hard way. When I was a boy in the bucket shops, I watched men who had the same information I had. They saw the same prices, the same moves. Yet I saw them freeze when they should have acted, or chase when they should have waited. Why? Because their emotions made them blind. Have you noticed how your hand feels heavier on the buy button when you're scared to miss out, and heavier on the sell button when you're scared to lose? Fear and greed, they're both natural, and they're both deadly if you let them steer the trade. You see, fear keeps you from entering a good position when the market shows you the chance. It tells you don't do it. What if you lose? Greed, on the other hand, pushes you to stay in too long. It whispers, just a little more, don't sell yet. Neither of those voices care one bit about your survival. They only care about how you feel right this minute. And trading is no place for feelings. Tell me, do you think the market cares if you're nervous or eager? The only thing that saved me time and again was discipline, the kind you hammer into your bones through mistakes. I remember taking trades where I was sure of myself, then losing heavily. It taught me that being sure is worthless if the market says otherwise. The market never lies, only traders do. They lie to themselves. Fear lies. Greed lies. They both tell you stories to make you comfortable. Not correct. How many times have you held a loser because you didn't want to admit you were wrong? That's fear of being wrong, not strategy. And how many times did you refuse to take a profit because you thought you'd catch a bigger move? That's greed, plain and simple. Let me give you something clear. When I read the tape, I wasn't looking for magic numbers. I was looking for behavior, price behavior. Because behind every price is a crowd of men and women fighting their own fear and greed. That's what moves the market. You'll see a breakout, it climbs a few points, then stalls, fear creeps in for the weak hands, they sell. Then the strong hands who know the trend take their stock from them. The game repeats. You think the chart is lines and bars, but it's really a battlefield of emotions. Don't you think it's easier to fight the battle if you understand the enemy? The worst part is that fear and greed look reasonable in the moment. Fear dresses itself as caution. It says, better wait for more confirmation. Meanwhile, the move is halfway gone. Greed wears the costume of optimism. It says, this trend is strong, why sell now? Meanwhile, the reversal is forming right under your nose. I've seen traders lose, not because they lacked knowledge, but because they lacked self-mastery. Knowledge is easy, you can read a chart, you can calculate points, but controlling fear and greed, that's work, and it's the only work that counts. Ask yourself, do you spend more time studying the market, or studying yourself? You can't kill fear and greed, they're built into human nature. But you can chain them, keep them from running wild. How? With rules. A trader without rules is a gambler, and gamblers always lose in the long run. My rules were simple: cut losses quick, let winners run, never add to a losing position. These weren't theories, they were shields against fear and greed. Because fear will tell you to hold a loser, and greed will tell you to add to it. Rules don't care what you feel. They force you to act in your own interest. Haven't you noticed that the hardest decisions are usually the right ones? I'll tell you something that might sting. Most traders don't fail because of the market, they fail because they can't master themselves. A man who can't control his fear will never buy when he should. A man who can't control his greed will never sell when he must. That's why the market punishes them. The market is like a teacher with a hard hand. It gives you the same lesson until you learn it, and that lesson is discipline. Now, think of your own trading. How many times have you repeated the same mistake, promising yourself you'd never do it again? You see, the mind loves comfort. Fear and greed both offer it in their own way. Fear says, don't risk it, stay safe. Greed says, keep holding, the dream's alive. Both give you comfort now, but pain later. The market rewards the opposite: pain now, comfort later. It hurts to cut a loss, but it saves you capital. It hurts to sell too soon, but it locks in profit. That's the trader's paradox. You must accept pain today for survival tomorrow. Do you see how backwards that feels compared to human instinct? When I sat in my trading room, I would remind myself the big money is made in the sitting, not in the trading. But the sitting I mean is patient, disciplined sitting, not fearful sitting or greedy sitting. Fearful sitting keeps you out when you should be in. Greedy sitting keeps you in when you should be out. The right kind of sitting is simply waiting for the market to prove your point. That's all. But how many traders have the patience to wait without fear or greed gnawing at them? I once held a position in a bull market, and every day my account grew larger. My friends told me to sell, to take the money. Their fear was contagious. They wanted to cash out, and they wanted me to confirm their decision. I didn't. I waited, because the market hadn't given me a reason to sell yet. That patience was worth millions. But I also remember another time in a bear market when I thought I was clever enough to catch the bottom. I bought too soon, and the market went lower. I bought more, greedy to catch the bargain, and I paid dearly for that lesson. So, which voice do you think was louder in my head than fear or greed? The trader's real wealth is not his money, it's his ability to think and act independently of fear and greed. Money comes and goes. I made fortunes and lost them, but the skill to act against my own emotions is what kept me in the game. When you learn to shut out those voices and just obey your rules, that's when you stop being a victim of the market. That's when you become a trader, not just a player. Do you want to be a trader, or just another name in the crowd of losers? Every chart you see, every line you draw, it's just the story of fear and greed repeating over and over. Tops are made when greed peaks, bottoms are made when fear explodes. That's why studying history is so valuable. The same emotions play out in every cycle. The faces change, the stocks change, the decades pass, but the emotions stay the same. Fear and greed never evolve. They are as old as the market itself. So, doesn't it make sense that your best edge is not in predicting the market, but in controlling yourself? When I walk into a trade, I already know two things: how much I'll risk and what price proves me wrong. That's it. If the market moves against me, I get out. No second guessing. Fear wants me to hope, greed wants me to double down, but rules tell me to exit. That's how I keep my capital alive. Because without capital, you're dead in this game. The first rule of trading isn't about making money, it's about not losing it. You can always catch the next move if you still have your stake. Do you think the market cares how brilliant you are if you're broke? I've seen men destroyed not by one bad trade, but by a dozen small ones fueled by fear and greed. They hold losers too long, they sell winners too soon, they chase after every rumor. Slowly, their capital drains. Slowly, their confidence breaks. Then they're finished. And it all comes back to the same two enemies. You can say the market is cruel, but I say it's just honest. It exposes every weakness you have. If fear and greed rule you, the market will find out, and it will take your money. The strange thing is that fear and greed never shout, they whisper. Fear whispers, just wait a little longer, don't act yet. Greed whispers, don't sell yet, you'll miss the big move. They sound reasonable in your own head. That's why rules are so important. They don't whisper, they command. And commands are what save you. Have you ever noticed that the most dangerous trades are the ones you justify to yourself in whispers? Fear keeps you from entering when the market gives you the best chance. I learned that lesson early, and I paid for it with hesitation. You see, the market often rewards the man who can act when others hesitate. But fear, that quiet voice in the mind, convinces you to wait for more proof, more confirmation, more comfort. By the time you feel comfortable, the best part of the move has already passed. Haven't you felt that before watching a stock climb, just as you told yourself to wait one more day? The thing about fear is that it never announces itself as fear. It doesn't tell you, I'm scaring you. It tells you be smart, don't rush, don't be reckless. It dresses itself as wisdom. But it's not wisdom, it's delay. It's the kind of delay that costs you profit. A real trader doesn't need the comfort of certainty. He knows certainty never comes. The moment you need to be sure, the market has already moved. Think about how many opportunities you've missed because you wanted the market to send you a personal invitation. Did it ever send one? I used to sit and watch prices form a perfect setup, everything aligned with my plan. Yet, instead of acting, I'd hesitate. I'd say to myself, I'll wait to see if it holds here. I'll wait to see if the volume increases. I'll wait to see if tomorrow confirms it. All those waits were fear, and every time I waited, the market either took off without me or turned in such a way that made me question my judgment even more. That's how fear traps you. You miss the chance by pretending you're being cautious. Now, don't confuse this with patience. Patience is a deliberate choice to wait for the right setup. Fear is hesitation after the setup is already there. Patience is strength. Fear is weakness. The difference lies in the reason behind your waiting. Are you waiting because the market hasn't given the signal yet, or are you waiting because you don't trust yourself to act? That difference decides whether you make money or watch others make it. Can you tell the difference in your own trading? I remember one particular campaign in a bull market. The tape showed accumulation. The charts lined up. The signs of strength were written in every movement. I had seen this pattern before and knew what it meant. But instead of buying boldly, I hesitated. I told myself, maybe it's too obvious. Maybe I should wait until it clears the last resistance. Maybe I should see another day of confirmation. By the time I finally bought, the stock had already moved halfway. My profit was smaller, my risk was larger, and my timing was weaker, all because fear kept me from acting at the right moment. Tell me, hasn't fear made you late before? Fear works strongest when money is on the line. It whispers, don't risk it, what if you lose? It reminds you of your last bad trade. It shows you visions of losing your capital, of being wrong again, of looking foolish. That's fear's favorite trick, tying your ego to your trade. Because it's not just about losing money, is it? It's about admitting you were wrong. And fear makes that possibility unbearable. So, instead of risking being wrong, you do nothing. And in doing nothing, you guarantee you miss the chance to be right. Does that sound familiar? The greatest opportunities in the market often appear when fear is thick in the air, prices are low, sentiment is dark, everyone is cautious. That's the very moment fear convinces you to stay out, but that's also the exact moment the wise trader steps in. Not recklessly, not blindly, but with discipline. He sees the same fear everyone else sees, but he doesn't bow to it. He acts when others freeze. That's the difference between a player who survives and one who prospers. And tell me honestly, when was the last time you froze at the very bottom, afraid to buy? The reason fear is so dangerous is because it feels safe. A man doesn't feel like he's making a mistake. When he hesitates, he feels like he's protecting himself. He pats himself on the back for being cautious, while the market rewards the man who acted. Fear robs you quietly, not loudly. It steals opportunity, not capital, at least not right away. But opportunity lost is capital denied. Every missed entry is profit you'll never see again. How much has fear cost you in profits you never took? The cure for fear isn't courage, it's preparation. You can't simply tell yourself, don't be afraid. That's worthless. Fear disappears when you have a plan. If you know your entry, your risk, your stop, and your target before the trade, fear has less power. Because then you're not acting blindly, you're acting according to rules. When the setup comes, you execute. The plan replaces the fear. But if you walk into the market without a plan, fear will always win. Would you send a soldier into battle without a weapon? Then why step into the market without rules? When I was young, I traded on instinct. I would see a move, feel the excitement, but then freeze because I didn't trust myself. That's fear again, the fear of being wrong. But over time, I learned that being wrong isn't the enemy, staying wrong is. If you cut your losses quickly, you have nothing to fear from being wrong. The only thing to fear is failing to act when you should. Think about that. Isn't missing the trade often worse than taking a small loss? Fear also shows itself when you size too big. A man risks too much, and suddenly every tick against him feels like disaster. His palms sweat, his mind races, his fear multiplies. He hesitates at the next signal because he remembers the pain of being overexposed. That's why proper position sizing is not just about risk management, it's about emotional management. If your size is too large, fear will always paralyze you. If your size is comfortable, you can act without shaking. Have you ever noticed how much braver you feel when your size is smaller? There is another side to fear, one less obvious but just as destructive. That's the fear of missing out. You watch a stock run, you hesitate at the entry, and suddenly fear shifts from what if I lose to what if I miss it. Now you chase, buying too high, just as the move exhausts. That's still fear, it just changed its mask. 1 minute fear keeps you out, the next minute fear drives you in at the worst price. Either way, fear makes you act against your own interest. Do you see how fear can wear two faces? When I think of all the trades I missed because of fear, I don't remember the exact prices or the exact days. What I remember is the feeling of watching the tape confirm what I already knew, but being too weak to act. The market doesn't forgive weakness. It punishes hesitation just as surely as it punishes recklessness. The man who hesitates misses the reward. The man who leaps without thought loses the capital. The balance is discipline, action guided by rules, not emotions. Do you have rules strong enough to silence your fear? Every great trend in history had to start somewhere. At the beginning of every bull market, there was a day when it wasn't obvious, when the crowd was still afraid. That's when the trader with courage and preparation stepped in. The public only saw the opportunity later, when it was obvious, when fear had already passed. But by then, the best chance was gone. The crowd trades when it feels safe, but safety in the market is an illusion. It always comes too late. Are you waiting for safety, or are you trading when the chance is real? Fear will always be with you. You can't erase it, but you can strip it of its power by deciding in advance. If the chart shows your setup, you act. Not because you feel brave, but because that's your rule. And when the fear whispers, wait, be careful, you remind yourself that your survival is not in waiting, but in acting with discipline. The best chance often looks the scariest, that's why so few take it. And that's why those few reap the reward. Charts are the footprints of fear and greed, nothing more. People like to dress them up, to imagine there's some secret code hidden in the lines and bars. They look for mystical patterns. They give names to shapes. They convince themselves the chart is telling them the future. But what is a chart really? It's just a picture of human emotion played out in prices. Every tick is somebody's decision, and every decision comes from fear or greed. When you stare at a chart, you're not looking at mathematics, you're looking at psychology. Haven't you ever noticed how the same patterns appear over and over? No matter the stock, no matter the decade. It doesn't matter if it's 1907 or 2025, the chart still looks the same because human emotions never change. The market is simply a stage, and traders are actors repeating the same roles century after century. Greed makes them buy too high, fear makes them sell too low. That behavior prints itself on the tape and leaves the footprints we call charts. When I was watching the ticker in the old bucket shops, I didn't need to know why people were buying or selling. The tape told me all I needed to know. The story was written in the price, and the story was always about fear and greed. Can you see how simple it really is? The public loves to think charts are complicated science. They believe if they study enough indicators or draw enough lines, they'll unlock some hidden key. But the truth is far plainer. A rising chart means greed is stronger than fear. A falling chart means fear is stronger than greed. Sideways action means the two are battling it out. That's all. Of course, you can measure the struggle in different ways: volume, momentum, volatility, but at the core, it's always the same fight. Fear and greed, two forces tugging the rope, leaving marks on the ground. Which side do you think usually wins in the short term? The crowd always buys after a rally is obvious. That's greed at work, late greed, the kind that shows up when the chart has already made its run. You'll see the chart spike, candles stretch higher, volume surge. It looks exciting, it looks strong, but really it's just the public rushing in, feeding their greed, buying what should have been bought earlier. And right when greed is loudest, the chart reverses. The footprints change direction, the price collapses, and the same crowd that bought in haste now sells in panic. That panic leaves its own trace, the long red bars, the heavy volume. That's fear's footprint. Haven't you seen those traps laid out right in front of you? The great thing about charts is that they don't lie. A man might tell himself all kinds of stories about a stock. He'll say it's undervalued. He'll say it has growth ahead. He'll say it's a bargain. But the chart tells you the truth. If the price is falling, it means fear is stronger, and all the reasons in the world don't change that. If the price is rising, greed has the upper hand. The chart doesn't care about your opinions. It reflects the sum of everybody's emotions in the market. Isn't it cleaner to trust the footprints than your own wishful thinking? One of the hardest lessons I learned was to stop fighting the chart. I used to argue with it. I'd see a stock falling, but tell myself it couldn't go lower. I'd think the selling was overdone, that the decline was unreasonable. That was me letting my own greed blind me. I wanted the bargain. But the chart kept falling because fear was still in control. When I finally accepted that the chart is always right, I began to trade with the flow instead of against it. That's when the real profits came. Have you ever argued with a chart and lost? Charts are like mirrors. They don't show you the market as you wish it to be, they show you the market as it is. The footprints of fear and greed are right there in the patterns. A breakout tells you greed has kicked down the door. A breakdown tells you fear has flooded the room. Consolidation tells you the two are wrestling in a stalemate. Every movement is a clue, not about numbers, but about human behavior. That's why studying charts is so powerful. It's studying people without ever speaking to them. Doesn't it make sense to learn the language of footprints if you want to follow the crowd's path? Volume is one of the clearest footprints. Rising prices with rising volume, that's greed gaining followers. Falling prices with heavy volume, that's fear spreading fast. Light volume with sideways action, that's indecision, fear and greed both holding back, waiting for something to tip the balance. People think volume is just a statistic, but it's really emotion made visible. The louder the crowd feels, the heavier the volume. The quieter the crowd, the lighter the print. Next time you see volume swell, ask yourself, is it fear screaming or greed shouting? I never trusted tips, I never trusted chatter, but I trusted the tape. Why? Because the tape was nothing but pure footprints. You can't hide fear on the tape. You can't disguise greed. A man can lie with words, but not with his money. When he buys or sells, he leaves his mark, and the chart records it forever. That's why the chart is the truest history of the market, because it's written in dollars, not opinions. Don't you think money speaks louder than talk? The fascinating part is how repetitive these footprints are. A breakout looks the same in sugar in 1919 as it does in tech stocks today. A panic sell-off looks the same in railroads as it does in cryptocurrencies. Why? Because people don't change. The instruments change, the errors change, but human emotion stays constant. That's why I could trade any market once I learned to read charts. I wasn't trading stocks, I was trading people. And people, driven by fear and greed, never evolve. Doesn't that make the game fairer than most realize? Another thing about charts, they expose your own emotions, too. You might look at a chart and feel excitement as it climbs. That's your greed mirroring the crowd's greed. You might look at a falling chart and feel dread. That's your fear echoing the market's fear. If you don't learn to separate your own feelings from the footprints you see, you'll be trapped by them. The best traders read charts, like a doctor reads an X-ray without emotion, just observation. But how often do you catch yourself cheering for a chart to go your way instead of just reading it? The footprints of fear and greed are clearest at turning points. At the top, greed is exhausted, buyers are spent, the chart begins to stall, and then you see the reversal footprints, long upper wicks, failed breakouts, distribution on heavy volume. At the bottom, fear is climaxing, sellers are desperate, prices fall too fast, too far, and then footprints of exhaustion appear, long lower shadows, sudden spikes in volume, sharp rebounds. These footprints are warnings if you have the eye to see them. But if you're blinded by your own fear or greed, you won't. How many tops have you bought because greed convinced you it would go higher? How many bottoms have you avoided because fear told you it would fall forever? Charts aren't magic, but they are honest. They don't predict, they reveal. They reveal what fear and greed have already done, and what they are likely to do next if the behavior continues. The footprints give you probabilities, not certainties. A trader doesn't need certainty, he only needs an edge. And that edge comes from seeing the footprints for what they are, the trail left by human emotion. Follow the trail, and you follow the money. Isn't that the whole point of this game? Rules exist to chain fear and greed. Without rules, emotions win. That's not a theory, that's a fact written in my own account books, written in the fortunes I made and lost. A trader without rules is a gambler, and gamblers are doomed by their own nature. The market is a wild place, a battlefield where every tick is a shot fired. Fear and greed run loose like animals, and if you don't have rules to chain them, they'll tear you apart. Think about your own trading when you acted without a rule. How often did fear or greed sneak in and take control? The trouble is, rules sound boring to most traders. They want excitement, they want action, they want the thrill of the chase. But that thrill is just greed wearing a smile. The fear comes later, when the trade turns and the thrill turns into panic. Rules don't give you the thrill of being reckless, but they give you the profit of being consistent. Which do you think lasts longer? When I was a boy trading in the bucket shops, I didn't have fancy strategies. I had simple rules, hammered into me by losses. One of those rules was to cut my losses quick. I didn't invent that rule, it was forced into me by the market. I'd hold a loser too long, hoping, waiting, wishing, and every time it got worse. Eventually, I learned to cut the moment the market proved me wrong. That single rule saved me more money than any clever scheme I ever devised. Do you see how a rule protects you from your own greed to hold and your own fear of admitting defeat? Another rule I carried all my life was never to average down. The market will tempt you to add to a losing position, whispering that you'll lower your cost and make it back faster. That's greed's trick. But the truth is, you're just digging your hole deeper. A losing stock can go lower and lower still. By adding, you're handing more power to fear, because every tick against you now hurts twice as much. My rule was simple: never average a loss. It kept me alive when others destroyed themselves. Haven't you seen traders go broke because they couldn't resist the temptation? Rules also guard against the opposite side of emotion. Greed doesn't only show up when you're losing, it screams the loudest when you're winning. You catch a trend, your account swells, and greed tells you to take more risk, to add more size, to forget caution. Without rules, you'll press too hard and turn a victory into a disaster. My rule was to add only to winners moving in my favor, never to force a bigger bet than I could afford. That rule chained my greed when the thrill of profit tried to blind me. Haven't you noticed how dangerous you feel after a big win, and how quickly danger turns into disaster? The hardest part of rules is not writing them down, it's obeying them when fear and greed are loud. Anyone can say, "I'll cut my losses when the market is closed." But when the tape is running, and your stock is falling, and fear is screaming, "Hold a little longer, will you obey?" That's where rules matter most. They're not there for the easy times, they're there for the hard times. When emotions are strongest, rules are your last line of defense. Tell me, how many times have you had a rule but broke it in the heat of the moment? I used to keep my rules written where I could see them. Not because I didn't know them, but because I needed the reminder when fear and greed tried to argue with me. The market doesn't punish you for not knowing, it punishes you for not doing. A man can know every good rule and still lose everything if he doesn't obey them. Rules aren't knowledge, they're discipline. And discipline is the only thing that beats emotion. Isn't that the difference between amateurs and professionals? The amateurs know, the professionals obey. Every successful trader has rules, though they might differ in detail. Some use strict stops, some use trailing stops, some only trade certain conditions. The rules don't have to be the same, but they have to exist.